Kia ora whānau, and welcome to another episode of Get a Job and Get Healthy with Costas Enterprises. I am your host, Alex Costas, and today we're going to sort of talk a bit more. I know recently I've sort of had a little talk about my mental health and all that sort of stuff. Now we're going to get back to the passive income type stuff. Specifically, we're going to talk more about investing with shares and all that sort of stuff. I'm going to give you an update on my journey. I've had a bit of a milestone just recently, so for me, it's quite a milestone. For everybody else, it's probably not very much. But I'm going to go over that and what I'm investing at, and also what I'm going to invest in shortly. After doing a little bit of research and stuff, what I'm looking at. And I'll give a bit of a brief explanation about why I've invested in the things that I've currently invested at. We're going to be completely open and transparent with it, so this might be a bit of a longer investment one. Of course, I am using Sharesies. Let's get through all the fun stuff first. First and foremost, there will be a Sharesies link in the bio that'll basically, if you are a New Zealander or you have access to Sharesies, maybe you're an Australian as well, you can actually use my code to get $5 free to invest, and I will, full disclosure, get $5 back if you use that thing. That is only valid for 30 days, so just be wary of that. That is 30 days from today, the 19th of January, which is when this episode will go up. This will also go live on YouTube as well. I would say around the same time. It'll take a little while. It will still go live today as well. So let's get through all the fun stuff. So first and foremost, as you guys know, me and my partner are doing coconut wax candles, 100% pure coconut wax candles. So you can go to our website. We just have relaunched our website with a whole lot of stuff. That is www.anyengarden.com. That's www.anyengarden.com. You can find our stuff there as well. You can also find our Instagram at anyengarden_candles. You can contact me directly via my email, doncostas@gmail.com. That's DONCOSTAS@gmail.com. The N in all of these, including the websites for Onion Garden, are always N for Nike. You can also find me on my website, www.costasenterprises.business.blog. You can also contact me at the Kiwi Don on both Instagram or on Twitter. So let's get into everything. So first and foremost, I've talked about Sharesies before, and I do love Sharesies, I really do. So let's get through everything. So one of the things I'm doing is, me and my partner are both going back to Vietnam in May, just for like 3 weeks. So we need to learn to save stuff. Now, I am doing part-time work as well, which I've talked about before. I work at the Wally Collective, and sort of learning more and more about retail and stuff. So the reason I'm telling you this is, one of the things that I'm doing is I'm splitting up the money that I'm getting, and I'm trying to save each time the money that I'm coming through, 70% is going to where we need to save things. So let's go through everything. Now, the investments we'll get into just after I do this other thing, and I'll tell you what I'm doing with the other things. So first and foremost, I had a savings account on Sharesies. At the moment, the Sharesies save rate is 4.6%, which is better than the banks, and they pay that every month. So it's pretty good. So you're not going to get penalised when you actually take the money out, which is fantastic. That's one of my big problems as well, is because, when a bank comes in, it'll turn around and, get rid of all these other things. This is part 3 in the Investing in Shares for Dummies. I think it's maybe part 4 actually, because I did do a part about KiwiSaver as well. But at the moment, this is sort of just covering off where I am. So yeah, savings, I've currently got $2,050.50. I did just recently take some money out to do some things that I needed to, including some of that was actually investing in something. So yeah, it was a bit of a risk, but I wanted to try it out anyway. And then I've got money for a house deposit. Now, I know I actually have a house already, but this is just money that I'm putting aside for a house deposit. At the moment, I've got about $112.07 in that. And then I'm also saving money from my Vietnamese trip. I currently have $112.07 in there. And then the last thing I've got in there is $111.49, I should say. And then my KiwiSaver, which I have not yet transferred, but that is one of the things I'm planning on doing probably tomorrow. Monday. At the moment in my current wallet, I have $1.20. So there's not a lot there. So the KiwiSaver has nothing at the moment. Now, the investments. This is where I wanted to talk about today. So I've got a couple of things that I'm going to talk about, and we'll probably talk about this in the next couple of episodes, because I'll talk about what I'm doing at the moment, and then I'll talk about what's on my watch list, and basically talk a little bit about why I've put those onto my watch list. So first and foremost, my current investments total $4,032.19. That is the big milestone that I'm talking about. I currently have $4,000 in my investment, which is pretty big for me. Now, my total investments, including everything, so this includes my investments, my savings, my house deposit in the Vietnam, I'm sitting at $6,307.45, which to me is quite substantial, considering, the investments one, I didn't have half as much as I should have. A year ago, I had less than 2,000 in there. So to have it at 4,000 is pretty big for me. Like a whole 2,000 in a year when I haven't been working. I'm pretty happy with that. Now, I do apologise about the rumble from the computer. I am sort of recording this on my phone, but I'm also doing it on the computer so I can see everything properly. Give you guys a good rundown of what it is that I'm actually doing. So, my total investments cost is $4,032.19. That is the estimated value based on right now, which is 5:37 at 19th of January. What does that mean? So that means I have put in $3,426.48 of my investments, and I have a current return of $643.33, meaning that my investment is returning an 18.78% return. So that's a lot of numbers to throw at you, but basically the easiest way to think about it is I've put in $3,426.48, and my investments have increased 18.78%, giving me an extra $643.33. Hence, my total of $4,032.19. The main reason I'm doing this episode today is because I hit 4,000. I did not expect to see that. The last couple of weeks I've been sitting at about 3,008, 3,007, and just to hit that was quite surprising. Can I pin it down? No, I can't. Now comes the fun part. So basically, I have done something a little bit different. So before I had maybe 1, 2, 3, 4, 5. I had about 5 shares in there. 6 shares, that I told you about last time. They were Berkshire Hathaway, Vanguard 500, Coca-Cola, Smart Shares US 500, which is the New Zealand version, the City Office REIT, and the Smart Shares US Large Growth Fund. So that's what I had before. I now have a lot more, and while there are little bits in each of these, there is a reason why I have started to do this, and this is part of the research that I've been doing. Granted, some of the research has been in YouTube, but it's made me think a lot more about what it is that I'm investing and why I'm investing in this. I also had Green Cross Health, so I had 6 shares. So we're going to start with the lowest and go up to the highest of what, and that is basically what my return is and all that sort of things. And I will tell you that up until about last night, the City Office REIT was winning the returns, which is funny because at the one point when I spoke to you guys, I believe it was the lowest. So it is one of those ones that, everything I'm telling you is still going to be high risk. I'm not telling anybody to invest in what I'm investing. I'm literally trialing everything. That is why I have these things going. There are some things that I do think are reasonably certain, which is why I've invested more into them, and I intend to invest more into them as well. So, first and foremost, let's go into them. So, we're going to go from lowest to highest. So, that is going to be the Green Cross Health is currently my lowest. Now, that is currently trading at $1.09 New Zealand dollars per share. Now, Green Cross Health is basically a provider of primary healthcare services. It is my lowest at the moment. Now, the main reason I'm in this is because they are offering a 43.32% return on dividend yield. So, for every share that I own, so if I've got $43, I should get, $4.32 per share, basically. So if we go to my investment, so this is where the other stuff comes in. So as I said, this is currently buying at $1.09. Now I did buy it at what did I buy it at? Hang on. I bought it when it was high at $1.40 because at the time I was talking to my partner. I then bought again at $1.30, and then I bought at $1.14 and $1.11. So it has gone down. Okay. However, this is one of those ones where there does tend to be a trend. Now, granted, over the last 5 years, I did buy it almost at the exact highest that it was. So not a good thing. I've put $121.17 into the Green Cross Health. I am minus $16.91, meaning that I am minus 13.96% from my original investment. However, because I've got $121.17, I'm sitting at about 94.57 shares. And my last dividend that I got was, and this is based on only having $70 in, was $1.17. Now I reinvest that, so all of my dividends I reinvest because that's how you grow your investments, is just to reinvest. Don't take the money out. I used to, it made problems. So, as I said, in December I got $1.17 for those shares that I had, and I did not have 94 shares at that time. Now I do have 94 shares, or 94 and a half shares. So I'm expecting a little bit more this time, given that $1.17 based on based on roughly half the shares is pretty good. I will hold this, but I'm on the fence of whether or not I will put more into it. The next one that I've invested in, now I only have $1 in this one. Okay, this is one of these testing ones. It is a US one. It's called the Realty Income Corp. Okay, ticker symbol is just the letter O. Okay, it is on the New York Stock Exchange. So Realty Income Corporation is a real estate investment trust. So it's another one of these REITs. The reason I've invested in this is, and I have invested it not when it's high, but I've invested it when it's a little bit higher than it has been. It's starting to go sort of semi up, semi down. The reason I've got this one is, in the ones that I was looking at, as a yearly REIT, they are offering 5.38% dividend yield. This is one of those ones that I intend to hold for a while, so I will be putting more into it. I'm currently down, so I've put $1 US into it. My investment value is currently sitting at 93 cents US, so I'm down 7 cents, which means I'm down $7.43%. So I don't have a lot of shares. I've got 0.01 of a share. It's basically $56.12 US per share, or about $91.48 New Zealand per share. Now I'm getting this share because this is one of those shares that I read about and saw about that over the long term, and we are talking, when I'm talking long term, I'm talking 10 years plus, okay? This is not one of those ones that I intend to buy and sell very, very quickly. It's like, I don't do day trading. The trading that I do is long term. I want to see the value of my compound interest. So Realty is one of these ones, or Realty Income Corp, is one of these ones where over the last sort of couple of years, they've done really, really well for their investors, meaning they've paid out quite well. For example, they pay 0.256 USD per share that you own, which isn't a lot, but they do also pay it in March, April, May, June, July, August, September. They pay almost every month, which is pretty surprising, actually. And that is part of the reason why I have it there. So if I go to my investment, let's have a look at upcoming dividends. with me. So the next dividend will be the 31st of January, and that'll be paid out on the 15th of February. And that'll be 0.2565 per share, of which I have no share. So I'll probably get like 1 or 2 cents, which I'm okay with. The next one is a long-term hold, and it is similar to the Vanguard S&P 500. This one is called the Schwab US Dividend Equity ETF. So ETFs are electronic traded funds. Basically, this fund seeks to track the total return of the Dow Jones, so the top 100 companies, basically. Because it's an index fund, it covers everything. I have bought it reasonably high, so it's currently sitting at $75.70 US. I have put $40 in. I am down $1.10, so the investment value is currently at $38.90, meaning a minus $2.76%. Now, granted, I only have $40 in there, so I'm not expecting much, but the dividend yield on this is 3.53%. They also pay quarterly, so March, June, September, and December. There's nothing at the moment coming through, but March will be the next one. I do intend to buy some more of the Schwab. I've seen a lot of YouTubers that talk about this have said Schwab is a really, really good one to have. It outperforms usually the S&P 500. However, it is still not as consistent or long term as the S&P 500. It hasn't been going super long. It's one of those ones where if you bought it low, you'd probably be a lot better. I'm buying it now, so it's still at its high, but it's still pretty much, it's not at the highest it's been, which has been about $81.09 in 12th of Jan. It's currently sitting at 76 or 75.70, so it's one of those ones where it will pay off in the long run. So I will keep intending to have it in the long run. They are also a company which they have basically said that they intend to increase the share price every year and payment to shareholders every year. So that's what I'm trying to do. I'm trying to set myself up so that this can become passive income over the long term. Not all of my investments are that way, but the newer ones that I'm doing for are dividend yield ones that are going to be reinvesting the dividend themselves, so that when I do eventually sell in the future, I will have some money that's there for me, basically. I do want to get to the stage where I am getting money every month. There is a way to do this. There is basically, if you put in, say, 5,000 to each of these stocks that you can do. These aren't all of the stocks that I'm doing. I do have them on. I haven't added them to my watch list, but I have added some. I will do a sort of a podcast episode about those things later. There's a very, very handy YouTube video which I've been following the guy's series, and yeah, a lot of the things that I've done recently, a lot of those have been added in there because of these videos. It's made me think a lot more about what it is that I want to sort of go towards and how I want to save. I don't have the 10,000 that they say you should have for 10 years. I've got to build into it. So what I do know is, because of compounding, if I put $1 in today, it's going to be a lot more in a couple of years. So that's the sort of value of what I'm going for. Now, the next one I found myself. This is the Smart Shares Asia Pacific ETF. Now, this is trading at currently $2.30 per share in New Zealand. The Smart Shares series is basically a New Zealand set of shares. This basically invests in international shares and is designed to back and return the FTSE developed Asia Pacific All Cap Index. So it's still an index fund. So, as I said, it's currently trading at $2.30. Now, the dividend yield for them is 2.26%. They also pay in November and in May. Okay? So I don't have a lot in this. I've got basically $14.81. Now, I put in $15, so I'm down 19 cents. Meaning that my return is currently minus 1.25%. So we're getting to the place where they're not really hurting me. I did have a couple where I was minus 26%, and then, I felt like I had to sell them because I just felt like I was wasting my money. So as I said, I've only put $15 in this. I probably will put more in the future, especially now that it is lower. I might add a bit more because it is New Zealand dollars, and it is also trading at $2.30 per share. I am one of these people that if I buy it where it's at now and it's high and it goes down, I hold. Okay, Warren Buffett is a big investor, and he says never sell, always hold, and so that's what I'm doing. So a lot of these ones that I'm doing, if I've made a mistake, like if I see it down really low than what it is, I'll either try to buy more, or if it doesn't track the way I want it to, I will then sell. But I do try to give it a chance. So this one, I only just bought this recently. I bought this in December, and I bought it at like $2.20, and it's now $2.32, and then now it's $2.30. So yeah, it's one of those ones where I'm going to track it. I'm going to keep an eye on it because, with a dividend yield of 2.26, it is an ETF. It is on the Asia fund, which Asia is one of those markets that a lot of people just sort of stay away from. I want to sort of like try to see what I can do to try and get a bit of money out of that. Now, the next one, as soon as I bought this, and as soon as I bought it, it went down, which is just hilarious. I finally went and did it. I didn't buy Tesla, I bought Apple. A lot of the YouTubers that I was talking about, they were talking about a couple of big tech companies. I know I usually say stay away from tech companies. Most of what I do invest in also has Apple and all that sort of shares, so I'm diversifying myself that way. But I thought, why not? Because they are really good for their actual for their investors. And I thought, let me start putting some money in it, because I've seen the overall dividend yield and what it is, and it's not huge, but given the prices and how it goes, it's worth a look anyway. So the Apple is currently trading at $188.63 US per share. Okay, now I have put in $45 US into this. It is currently down 0.46%, meaning it's down 1.03%, so still down, but it's getting there. That means my investment is currently down 46 cents, and I am sitting on $44.54. Now, their dividend yield, the dividend yield is only 0.53%. Okay, doesn't sound like much, but out of that 0.53%, they usually pay 0.24 US cents per share. So you can imagine if you've got quite a few shares, then it's going to go up and up and up. And that is the intention. Like when I'm buying these things, I am intending to fill them up and put more into each one, basically. They also pay in February, May, August, November. And it looks like they also do special shares as well, like in December 2022, they did a special share of 0.1667. Special shares is something that I've just learned about as well. Costco have just recently done one, and basically Costco's have an excess amount of money, so to get rid of the money rather than them investing them in cash, which only gives them sort of a 5% return, they're now getting, they're putting it back into the customer, and they're giving special shares have just been issued for $15 per share. So whatever share you own, no matter how much you have, rather than getting the 0.23% or whatever it was that you would get an extra $15 on top. So seeing that Apple does the extra shares as well, and knowing that, how Apple works and how it just the stock price usually is quite good, I have bought it when it's, it's starting to tank. Well, it's not starting to tank, it's starting to go lower. So I am okay with taking that loss for now, given that I know that Apple are always working on something new. So yeah, it's one of those ones where I'm looking at it, I'm going to put some into it. I do intend to have more and more in here. The next one is Berkshire Hathaway. Now, I talked about Berkshire Hathaway last time. Basically, Berkshire Hathaway is Warren Buffett's company that he uses to invest. This is one that does not have a dividend yield, okay? So you don't get dividends back for this. However, because it is Warren Buffett's and because it just goes up and up and up, Okay, so the shares that are tracking are a little bit weird. Each share is $549,849.98. So basically, each share is almost, in New Zealand, almost close to $900,000 a share. However, I have put in currently $113. I am up 0.72%, which means that I am up 81 cents of my original investment. Okay, this is one of those ones that I will keep putting in. Even though I don't get a dividend yield, it'll be one of my lesser ones that I put in. But the simple fact is, Warren Buffett is the greatest investor there is. Let's be real. He's worth billions upon billions upon billions. And he invests well. Like, no one can beat him. The S&P can't even beat him. I invested in this after I read a book about Warren Buffett. And I was like, you know what? Cool, let's do it. Let's go into his company. And so I'm really happy I did, just so I get a piece of it. And then when I do eventually sell, the compounding of that interest will come through, basically. Right, the next one is another company. So as you can tell, I've started investing in companies as well as ETFs. So I've already got some ETFs already sorted in funds and index funds. I do still intend to get some more of those, and I've also got royalties. But now I'm starting to invest in some of these companies that are part of S&P 500, but they also do give it dividend yields as well. One of these is Visa. So Visa and MasterCard are ones that apparently do quite good returns and investments. So for Visa, it is currently trading at $268.13 US dollars. I did buy not super high, but it is starting to go up. In fact, in the last 5 years, it's jumped from $134 to $268. So it's doing quite well. Now, their dividend yield doesn't sound like much. It's 0.78%. However, they pay February, May, August, November, and it looks like December as well, usually, sometimes. So that's four quarterly payments. Each time paying 0.52 cents per share. Again, this is one of those shares I want to have over the long term and have lots of money in it, because over the long term it will get more money. So I currently have so basically what I did is I took out $500 of my savings, which I was at $205, and I put $261 in it. It is currently up 1.36% from when I bought it. And remember, I bought it high. And I'm currently at 0.9866 per share. So I'm not yet at a full share, but I'm close. So I intend to buy more and get over that, basically. But being up 1.36%, I am up $3.54. Meaning my investment value in this particular one is $264.54. So as you can see, we're starting to go up. Now, based on the information that I heard about, over 10 years, these guys pay out not only well, but they also pay out a lot. So they actually help their investors, and that's what I like. Right, the next year, you guys have known about this one for a while, it is Coca-Cola. Now, I currently have Coca-Cola is trading at $60.16 per share. I have $290.67 in that. It is currently up 7.2%, meaning that I have a return of $20.92. So my total investment value is $305.87. I have just been paid a dividend for the five shares that I've got, and the dividend pay was basically $1.56, which got reinvested. So speaking of dividends, they provide a 3.7% or 3.07% gross dividend yield. Now, bear in mind that with 3.07%, they do pay out March, April, June, September, and November. So I should be getting something in March of about 0.46% at the moment. Okay, so it's still pretty cool. Warren Buffett, one of his biggest, he has in Berkshire Hathaway, they literally have like 40% of Coca-Cola shares, and that 40% generates him close to $1.4 billion every year on end. So if it's good enough for him, it's good enough for me. I love Coke. What's funny is I've also heard Pepsi Cola is also quite good, and that'll be the next one that I will be looking at in the future. I will invest in Pepsi Cola. I will probably invest a little bit more in Coca-Cola because it's $60 a share. That's not too bad as well. Right, my next investment is the Vanguard 500 Index Fund ETF. So this is currently trading at $437.77. Now, that is US dollars. I am a big fan of this ETF. While I said I'm not going to give you any investment advice, if you are going to invest and you're new to investing and you want to invest in something, invest in Vanguard 500 Index Fund. Okay? VOO is the ticker table. I cannot stress this enough. Year on end, they have been outperforming. Like when we had the crash in 2008, they were still performing. They were the only fund and market that was still in the positive. It consists of the top 500 companies. Well, it's actually 501 companies. I bought it quite low. Every time I buy it, it goes up. Like, they pay out 1.46%, meaning that for every share you own, you get $1.80 per share. So that's not too bad. If you own a few more shares, you're going to get more and more and more. Again, reinvesting. So, I currently have $448.39 US dollars in it. I have a return of 16.22% on that money. I only have 1.16 share. Okay, that 16% increase on that one share that I have of almost $500 is up $72.71. Okay, so that means my total value of the 448.39 earns out being $510.13. I cannot stop saying, if you are new to investing and you are investing in the future, if you are young or you are investing for someone young, which I think is something that you should be doing, invest in this index fund. Now, you will also see that I also invest in the New Zealand version of this fund, but not the New Zealand Top 500. It is the New Zealand Vanguard 500. So it tracks the same as this investment. It does not pay as much. The only advantage of it is the shares that I buy from that are much lower than what I buy here. And what I mean by that is the price. So as I said, this is in US dollars. In US dollars, it is $437.77, which is estimated to be around $713.53 per share, New Zealand dollars. It's a lot of money. It's a lot of money, especially if you're starting out investing. But the good thing about Sharesies is you can put a little bit each time, which is what I love. All right, the next one is literally the same one, the Smart Shares US 500 ETF. So this is the New Zealand version that tracks the same one that we just talked about. But as opposed to $437 per share, it is only $14.04 New Zealand per share. Again, when I bought this, it was close to $8 a share. And I have bought it since, and it has just gone up and up and up since. Now, dividend yield for this is only 1.11%. So for every share that you own, you're only going to get 0.05 cents per share. However, it fluctuates. So in May, so you get paid 2 times a year, May and November. In May, it was 0.072. So 0.07 cents, and then it was 0.05 cents. It changes based on, how the market tracks. The highest it was in 5 years was $13.92. So it's currently tracking higher at $14.04. So I currently have I have put in $417.46. My return is 21.59%, meaning I've got a return of $90.15 on that $417.46. So my current investment value for that is $501.52. And I currently have 35.72 shares. So when the dividends do come up, I will get, close to probably $1.50, $1.60 on that, which is not a lot. But if you keep investing, it's going to get bigger and bigger and bigger. As you can see, I have bought this when it is, I've bought it low, medium, higher, but it doesn't matter. Like, even if it goes down, it's still going to go up because the S&P 500 always goes up. Okay, so that's why I'm saying it's worth a look. And if you can't afford the Vanguard 500 and you're in New Zealand, use the Smart Shares US 500 as a starter. Now, the next one is the City Office REIT. Okay, so a REIT is a real estate investment trust. Okay, that basically means that they own a whole lot of real estate. People invest into that, and this money holds that. This is a US one. Okay, its ticker is CIO. It is currently only trading at $5.16 per share. Okay, now up until a couple of days ago, it was my highest return. The dividend yield, 6.59%, meaning for every share you own, you're getting 0.10 cents or 0.20 cents per share the last couple of times. They pay in January, April, July, and October. So what I also want to get into your head is thinking about when your dividends come in, so that they're reinvesting every month of the year. So that in January you get money, in February you get money, in March you get money. So, for example, the last one I got was 10 cents, and that got paid on the 24th of January for this. Now, when I tell you I only have $106.38, so to get 10 cents on that, it doesn't sound like much with dividends, but it does get reinvested. I have, with that $106.38, 23.82 shares of this. Now, my return, this is currently sitting at 27.76%. Up until about a week ago, this was sitting close to 42%. So, on $5.16 per share, it is worth looking at. Now, yes, that is US dollars, but still, if you want to invest early, I'm not going to say these guys are a sure thing. I can't. Not at the moment. I'm still learning some of this stuff. But basically, on the 11th of January, I'm going to get I did get $2.38 from my 23 shares. So $2.38, 23.8 shares. Got it? However, the amount I put in, $106.38, is up $29.53 on top of that, meaning my total investment value for this City Office REIT is $133.77. Now we come to the big one. Now, this one I probably have the most in. I also have the biggest return. So this is the Smart Shares US Large Growth ETF. Again, there is a large growth ETF. Okay. This particular one, this covers the Vanguard Growth ETF, and it tracks that. But rather than paying close to $500 to $600 per share, with this particular share, I'm paying $9.75 per share New Zealand dollars. I currently have $828.35 in this share. Okay, that gives me 112.5 shares. My return is 32.62% on this share, meaning my return on my $828.35 is $270.18, taking my total value of this share to $1,098.02. Now, the dividend return is not much. In fact, the last time they paid a dividend was in November. of 2022, and it was 0.0081, so not much. Now that I'm sitting at $1,000 invested in this, or rather currently in $1,000, I'm not likely to put more into it, okay? I'm more likely to keep it there and then build up my other ones that I've got going. However, as you can see, at $270 return for just sitting it there. Now, I bought this originally, when did I buy this? I bought this at like $5.60, I think. Hang on, 1 year, 5 years. Okay, I bought this share originally at $5.66 per share. It's now $9.75 per share. So as you can see, I've had my investment almost, not doubled, but pretty close. As you can see, the return is 32.62%. That is on the basis of all the times that I've invested. And I have invested quite a few times. We're talking at least 20 times I've put money into this, basically. So, in total, as you can see, my money is $4,032.19. All of those losses, all of those pluses are all in that $643.33. Now, I talked about, doing an episode soon on what else I'm investing. One of the things that I'm looking at is, some of the other funds that I can potentially invest in, and also companies that provide good dividends year on end and over long term. Some of the ones that I am looking into, I'm not going to give you the full list because there's quite a few and there's going to be even more. One of the ones that I want to really, I'll probably be putting money into it next, will be Costco. Okay, Costco, which is the code COST. The more I hear about this company, the more I like it. With the way of how they pay out, how they look after their investors, how they've got enough money to cover the cap of debt that they've got, but also make a profit. They could pay off like that $15 special dividend that I talked about. They could literally pay that off, all of their debt, and still give a buyout of like $5 per shareholder and be happy. So that's one of the ones that I'm definitely looking at. If I'm looking at other ones that I'm potentially wanting to, now most of these are of course US stocks. Some of them are ETFs, some of them are, most of them are businesses. But one of the other ones that I'm looking at doing is the SPDR, which is the S&P ASX 200, which is the top 200 resources fund for Australia. They do a 6.6% return, and they pay out basically in June and December, around 0.27 cents or around 0.58 cents, depending on when they pay. It's definitely one of those things that I'm going to be looking at. Now, again, that is an AUD, and that's currently trading at $13.19 AUD per share. I will be putting more in Schwab, as I said, the US Dividend Equity Fund, ETF. I'm probably going to put some money in American Express, Microsoft, definitely. And yeah, it's one of those ones where I'll be buying these probably pretty high, let's be real. But the intention is not to do day trading. The intention is to sell in like 20 years. Nvidia is another one of those ones where I will be looking at. They've just gone up and up and up. They haven't gone down. 5 years ago, they were trading at $32.9 a share. They are currently trading at $571 per share. That's 5 years ago. 1 year ago, they were at 167. Like, this is one of those ones where, like, they only pay 0.03% of their shares, but most of those shares are 0.04 cent per share. So we're not talking lots, but if you've got $10,000 in there, then you're going to get a lot more than that, you know? So yeah, just a little heads up about what I'm doing. I wanted to sort of give you guys an update. I probably will talk about this a little bit more, as there is some more that I want to talk about. I will go through what is on my watch list and explain why I've got them in my watch list a little bit more in depth. But other than that, I think this is a pretty long episode anyway. But yeah, I just really want to hammer down that if you're going to invest, it's not scary, okay? Yes, you can make mistakes, but, you know, do your own research. Like, go out there, do what I've been doing, watch some YouTube videos, read some books. Use my link to get $5. Try it out. Invest it in the S&P 5. Like I told you, there's an S&P 500 that, you know, if you're a Kiwi, you can invest and get half of a share and get some money back. You can watch it grow. Like, it's not, until you educate yourself, you're never gonna do it. And you should be investing now. Like, if you've got KiwiSaver, I've talked about this before, max out your KiwiSaver as much as you can save. If you've got no debts and you're getting enough money and you can maintain yourself, you should be putting in at least voluntary donations of 10%. That way your employer will put in 4%, you put in 10, that's 14%. It may not seem like much, but in 10 years' time, you'll see it grow. You'll see it grow. The compounding that I'm looking at with my shares, like, I'm up $630. When before I was up like 100 and I was happy. Just seeing it grow and grow and grow. And I've only been doing this 4 years, maybe 3 years. No, sorry, 4 years now. We're on our 4th year. But honestly, I've learned so much and it's made me want to invest more. Not into crazy things, don't get me wrong. I did look at crypto and all that sort of things, and I know someone's going to be like, oh, well, what about the new crypto ETFs? I'll be honest, I'll probably put a little bit in there, but crypto is still way too volatile for me to want to invest in the ETF. If I do, I'll probably put $100 in there and just wait. But what I want to stress to you is try to put away as much as you can to invest. Pay off your debts first. That is the first and foremost thing. Trust me, I know from just the way that I was. I used to spend so frivolously, and I had nothing to show for it. Now, is this money easy to access? Yes. I could take out the money today if I wanted to, and then I would have an automatic $4,000 for myself. But I'm trying to keep it in there. I want, by the end of this year, that to grow to 20,000. And then I want to see what my returns are. In total, I want my portfolio to be close to 50 to 60,000. And when I say my portfolio, I mean my savings account as well. Like, the money is just, I don't see why I wasn't doing this before. And I cannot stress it enough. If you're a parent and you have a child, this is not just restricted to New Zealand. Sharesies is one thing, but there's other things out there. Do your research. Vanguard, Fidelity, Schwab, like, look at what there is out there. Start investing in it. If you've got spare cash to do it, put the money aside and don't leave it. What I mean is, don't do the thing that I used to do and go, when I've got $1,000, then I'll put it in. Because you'll spend that $1,000 because something will come up. If you've got an ability to put money in every week, every fortnight, every month, whenever you get paid, if you can make it so that it's automatic, oh my God, that's the best thing about Sharesies, is it is automatic. I can transfer an automatic payment into Sharesies every fortnight if I wanted to, as soon as I get paid. And then when that money goes in, I can set it up with Sharesies to automatically invest it into where I want to invest it. Or they will invest it for me in what is tracking. Now, I don't like the auto invest because I'm doing all the research myself and I know what I want to invest in the future. However, if you're scared, that is the best thing to do. And then wait. That's all you have to do. Honestly. So many people, when they start investing and stuff like this, they think, oh, I've got to buy it and then I've got to sell it when it's high. No. Wait. Leave it. Leave it and let it grow. Educate yourself on compounding. And sooner or later, as I said, that share that I bought at $5 a share is now currently $9 a share. I have 290 coming off that, 230? $270 coming off that. It's just sitting there. And it's only going to grow. If it goes down, guess what? It goes down. That is one of the things that people need to know is they think, oh, I need to make sure that I'm always ahead. No. Look, Warren Buffett is one of those biggest people. He said, if it goes down, buy more. But do your research. If you believe in it, do your research. I can tell right now, if this goes down, I've already set up a price notification for this index, for this large growth fund. Now, bear in mind that this was the one that the dividend is no longer being paid out. But if it goes down to $7, I'm going to get a text from Sharesies going, hey, the price you're looking at is $7. And I will buy more if I have the available money. Same as the City Office REIT and the Smart Shares US 500. If it dips, buy. But do the research. Make sure you know what you want to buy. Until next time, people, I really want to say thank you for listening. Thank you for going down this road with me with passive income and mental health and everything. I really appreciate it. I hope that you make the changes. Take that spare $100 and invest it. Not in crypto, not in any old company. Like, do some research. But if you want to start it off, Vanguard S&P 500. Buy it now. Look, it will go down. Every day it'll go up and it'll go down. But look at it a year from now and go, wow, it's grown like $5. Oh, it's grown $10. Oh, it's grown $80. That is the shock you get. I would not have expected to be. This is why I did this episode today. As I said, I'm currently sitting at $4,032.19 total estimated value. I am up $643.33. I would never have thought that I would be up over $500 anytime soon. I know it's a long game. I was expecting to be a lot longer. But here we are. It is worth investing in yourself and it is worth investing in your future. Please think about it. So Sharesies link will be in the below. This will be up on YouTube later tonight, I would hope. Please contact me, doncostas@gmail.com. Until next time, I love you guys as always and good luck.